earn more money but too busy to start a side hustle? Do it the right way and teach your money to make more money for yourself, even when you're asleep. Dale Corpus will show you just how here on the School of Cash Flow. With his entrepreneurial mindset and extensive experience in real estate and finance, Dale will help you become a responsible, strategic, and passionate passive real estate investor. Learn how you can increase your earnings or find more ways to make money, only here on the School of Cash Flow.
Hey, good morning, everybody, and welcome to the School of Cash Flow podcast. I'm the host, Dale Corpus. So today I get to interview another GoBundance fellow member. I've been a member of GoBundance since December 2020, if I haven't told you guys yet. And it's brought a lot of good energy, good people, great ideas, and overall accountability in my life to take it to the next level. I'm not sure if I've ever said this before, but in GoBundance, in our community, it's all guys and we call each other Go Bros. And it took me a while to get used to saying that term. So today I've got a Go Bro as a guest. His name is Nick Dileone. Cool thing about Nick is that I got to meet him in person recently over our winter GoBundance mastermind over in Utah. And here we are today on this podcast episode. I'm excited to bring him on. Here's a little bit more about Nick. So Nick leads all aspects of Leone Real Estate Partners, and he's 100% full-time focused on growing the real estate business. He's originally from the New York City area, and he's lived there most of his life. Moved to San Francisco 6 years ago, and then right before COVID, he ended up moving to the great state of Texas, to Dallas, to start up a multifamily syndication business. He's been in commercial real estate for 20 years in some capacity, and has his focus over that period has been real estate management and operations. He fell in love with the real estate business while building IT systems for one of the largest real estate owners in the world, TIAA Nuveen, and that inspired him to get his master's at NYU in real estate finance and investment, and then allowed him to switch to the business side of commercial real estate, where he's been for the past 15 years. And while at Nuveen, he was a senior director asset manager managing various asset classes valued at approximately $1 billion, including 900 plus units of Class A multifamily. And after Nuveen, he headed up asset management nationally for a value-add industrial fund based out of San Francisco, where the firm owns 60 properties, 6 million square feet, valued at over 700 million. So Leone Real Estate Partners is focused on multifamily with 6 general partner deals closed in 2021, bringing their total GP doors to 700 plus. So Nick lives in Dallas with his wife, young twin son, and his mother-in-law. So without further ado, let's get started. Nick, welcome to the show. How are you?
Thank you, Dale. Thanks for having me. This is, I'm honored to be on, and I'm excited about it.
Oh, well, I'm excited too. It's like, I didn't realize you had twins, by the way. How is it being a dad of twins? Was that hard?
It's harder for my wife, but yeah, it's a lot of work, and they're twin boys. I would say their energy level is like 100% on their own, but it's like 150 when they're together. You get it all done in one shot, but it's a lot of work.
So since we met through GoBundance, remind me, how long have you been in it? And what's it even done for you, in your own words?
Yeah. So I joined, I think about March. I'm coming up on a year now. It's been amazing, right? Because there's these pillars out there, and, everyone's really successful business-wise. They've kind of figured out the financial piece of their life, but sometimes there's other pieces in their life they're kind of looking to kind of, supplement. And, the group is really about the 6 pillars, and supporting each other, and just being open and honest. It's pretty amazing when you kind of get into a group of people, and you have one of these kind of deep sessions with people. You just go really deep into some really difficult discussions. This is how the group works, and you just kind of cut through a lot of the stuff. So it's been amazing. I'm up for renewal, and I'm definitely going to renew. My wife loves it. Mother-in-law loves it. Just added tons of value to the family.
Okay. Has it, I mean, obviously you're doing a lot of, real estate investing now. It's just like, I want to even go back to that because you were in commercial real estate for some time, but the thing is you weren't an investor first. I believe you had a W-2 job in commercial real estate, right? And so can you just I want to hear more about what you were doing and how that progression led to you becoming like a GP and an LP.
Yeah. So it was interesting. I mean, I had the W-2 for a while, in commercial real estate, working at Nuveen, various roles. I headed up asset management analytics nationally for reporting to head of asset management, built an analytics team, basically analysts supporting the asset managers. And then I was an asset manager for various asset classes like I discussed, but always kind of on the W-2 side. And I kind of want to tell a little story about my dad and kind of how it relates back to the W-2. My dad was kind of my champion, my hero, a big risk taker. And he was an interesting dude because he had a lot of tattoos. He had tattoos everywhere. And he was a stereotypical entrepreneur. And I kind of went the more conservative route, kind of the W-2 route for many, many years. And I was in sixth grade and I was talking to some of these like smart kids. They had this puzzle where basically it's like on a brain tease, you had to kind of move these animals across the river, like according to certain rules, basically. Mm-hmm. And it's like, my dad's a really smart guy and kind of creative guy. So I'm like, okay, Dad, here are the rules. This is the brain teaser. You have to kind of figure it out and you have to play within these rules. And he figured out the puzzle, but didn't play by the rules, right? He kind of broke the rules. And I said, Dad, that's cheating. That's not the way you do this. You have to play within the rules. And it wasn't until I kind of moved out of that W-2 world and became an entrepreneur that I kind of understood the entrepreneur within me, that basically you have to think outside the box when you're an entrepreneur. At the time I was frustrated with his answer, but I really kind of understood it because you're just thinking on your feet all the time when you're an entrepreneur. And the transition basically was I worked in San Francisco, decided to part ways with that company. We had some friends and family down in Dallas and like, you know what? Let's start a multifamily syndication business. Let's move to a very landlord-friendly state. Maybe look for a W-2. COVID hits, couldn't get a W-2, just kind of went 100% into that multifamily syndication. So that was the path.
I find it really interesting that you started, your multifamily investing business kind of like when COVID was happening. Did that scare you? I mean, with COVID having a lot of uncertainty, it's like, and what was going through your mind?
Yeah. I mean, my wife was good. She right out of the gates, like, you've been thinking about doing your own thing. Let's move out of California, lower our cost of living, and then start up the business. Now, as she was supportive, but it was taking a while to get our first deal. We didn't get our first deal until 2021. We started in 2020. And there were times where my wife was like, you know what? Are we sure that we're going to be able to do this? This is a little bit scary. I've always been a W-2 employee. She's always been a W-2 employee. You have that quote unquote safety. You think you have the safety of a W-2. And she's like, you might have to go back and get a W-2, like if we can't get a deal, or maybe we talked about like, maybe we can't focus on just DFW. Maybe we need to focus on secondary markets that aren't as competitive. And that's actually how we get our Waco deal that we'll talk about. So it definitely was scary. But it was I got laid off from Nuveen, decided to part ways from the industrial fund in San Francisco. And then COVID was kind of the third punch in the gut that finally pushed me to take the risk to like launch the business and just go in full time. So for us, COVID in that way was a blessing because we just wouldn't have taken that push.
Yeah. Sounds like, the opportunity, like, it sounds like, the opportunity sounds like it presented itself. The stars aligned and you were like, I think I'm ready. Yeah. And so, were you already in real estate investing while you were still W-2'd, or did you just get into all of this, after you left corporate?
Yeah, it was really after I left corporate, kind of immerse myself and listen to podcasts, kind of learning about the syndication model. When I had the W-2, I sold a industrial property in Plano, Texas. And and we were doing death, best, and final interviews. And the guys that won were like, okay, we still have to raise capital for the deal. And I was like, what is this talking about? My boss was like, oh, they're syndicating the deal. It's the first time I heard about syndication, because I always came from the fund model, right? You raise the money up front, you have full discretion to invest your funds. So that was the first time. But listening to the podcasts, a lot of good podcasts out there, kind of understanding the syndication model and how that all works. It's like, okay, wow, we can, and what we started doing was like, okay, we can invest passively in some deals while we're looking for deals to help support our income. So we're passively invested in a bunch of deals as a limited partner.
Yep.
And then also kind of look for deals as a general partner. And it's allowed us kind of to get mailbox money passively. So we're on both sides of the table. And it's good to invest passively. If people are thinking about being a GP, it's always good to invest as an LP to kind of sit in that seat to see what that's like, because you're going to have investors that you have to report back to, give them updates. And so that's always a good thing to do. And that was another benefit of being an LP in deals.
Got it. So what was your first investment? Was it as a limited partner? And like, what did you invest in?
Yeah. So, interestingly enough, I head up a meetup called Dallas Multifamily More. It's a brand that Jamie Gruber heads up in Michigan. And I met two people that were part of my community that head up San Francisco Multifamily More. So like the day before we moved from San Francisco to Dallas, we met these two people in person. They're such sweet, kind people. They live in Hayward, and they were syndicating a deal, raising capital for the deal. And it was a Dallas deal. So it's like, okay, this is going to give me Dallas exposure. I really like these people. I trust these people, because that's like 80-90% of when you invest is you're investing in the people. You're betting on the horse, on the jockey, not on the horse. So we invested passively with that couple in the deal in Dallas. So that was our first investment, investing passively.
Okay, got it. And then like, how many did you get into a certain amount of LP investments before you became a GP? I think your progression was like, I'm not a GP yet. I'm an LP in many syndications, but I'm just trying to understand, how did you go from LP to GP so quickly?
Yeah, I mean, it really was, part of it was a real estate community. I joined a real estate community that has mentorship, partnership. A lot of the partners that I met, that I did deals on, I met through the community. So that really scaled the business quickly, allowed me to meet, those people that I invested with passively, but also on the GP side. So kind of as we were launching the business, making offers on deals on the GP side, we were also looking at deals on the LP side. And that also kind of gives you a sense of like where the market is, like, what cash on cash people are offering on deals, what IRRs people are offering on deals. So you kind of understand the market, and that's changed significantly in the past couple of years. I'm going to talk about that later.
Yep.
But yeah, so just basically looking for GP deals and making offers while we're also investing passively. And, my real estate background and experience allowed me to kind of build credibility with these brokers kind of right out of the gate when we're making offers, talking with those guys, because it's really just knowing the jargon and kind of understanding the business and building credibility. So that's part of why we were kind of able to scale pretty quickly as well.
No, that's cool. I mean, let's talk about multifamily, since that's kind of like right now your bread and butter. What kind of deals do you go for? I mean, or even, are you able to talk about a recent deal that you went through?
Yeah. So we look for typically value add, because that's going to yield higher returns. Returns have shifted a little bit, especially in the past year. But one deal in particular, and this kind of aligns with the conversation that I had with my wife, like DFW is super competitive. Mm-hmm. Maybe we need to look outside of DFW. So there was a deal in Waco, Texas. So that's about an hour and a half, depending where you are in DFW, 2 hours south of where we live. It's a secondary, tertiary market. Mm-hmm. The major employer is Baylor University, right? And then of course there's Chip and Joanna that have their big brand, on the home development TV shows. So those are kind of the two draws to that city. It's halfway between Austin and Dallas. And, so we started looking at deals there because it's a secondary market. We started looking at El Paso for a little bit. But this particular deal, we ended up closing this deal. It's a 120 unit deal in Waco, Texas. It's called Fleetwood Square. And I have a partner that actually lives in Waco. It's one of the reasons why I partnered with him. His fiance he got married about a month or so ago, is a professor at Baylor. And so he's, super boots on the ground, right? He can drive he's 8 minutes from the property. So we closed in 2021 in September. Unit mix is good because it's about 65% above 2 bedrooms. You want more 2 bedrooms than one bedrooms because there's less unit turn, less costs. People want to stay in the units a little bit longer, less transient. Mm-hmm. It was built in 1972. And what we really liked about this deal, because we're typically looking for value add, higher yields. This particular deal was a management play. So, most deals, like I spoke to actually one syndicator about the deal. He looked at it quickly. He saw that a lot of the units were already renovated by a previous syndicator. And he said, I don't want to touch that deal. It's not enough value add. Basically, the returns are not going to be good. But he didn't dig in far enough. Mm-hmm. So basically, it's a management play. Basically, you reduce expenses and increase rents. Mm-hmm. So we saw that the existing, the person that owned it before didn't protest taxes in 2 years. And that's a big thing in Texas. Every year, your taxes get reassessed. It's a big expense line item. It's the biggest expense line item. You always protest taxes. That's what I did in my previous asset management jobs. It was a big thing to kind of protest the taxes across the country. So protest taxes and just reduce expenses. And then, kind of anecdotally, when we were touring the property, the existing property manager, she had on her monitor, her screen, she had a little piece of paper that had written down like rents that she would charge by unit. And I looked at that, I'm like, wait a second, that thing is like a piece of paper. It's not constantly changing. So it's like, when's the last time you updated that piece of paper? She's like, yeah, it's been about a year and a half. So like I knew right away that means she's not pushing rents, even before you did a rent study to see if you're under market. Mm-hmm. So the returns were pretty good kind of going in. And then here's like another story. So, right before in the DFW area, in order to win deals, it's super aggressive. So you have to put hard money, non-refundable day one upon contract execution. So what you do is you get an early inspection period. You do most of your physical DD before you sign the contract. Mm-hmm. So we wire the money. The money goes in, and then we get new updated financials, and all of a sudden the expenses increase by $60,000. So like, wait a second, that means the value of the property just went down. Like what happened here? So the owner was very good about it, very cordial about it. It was just a mistake that this stuff was missing. But the benefit was it allowed us, because I sold all the properties at my previous W-2. Yep. On the industrial side. So I had experience being, a seller, so going through this retrade process, been through it before, was able to negotiate almost a $300,000 discount on the price. And that really helped us juice up the returns on this deal. It's really kind of a potentially like once in a lifetime deal because it was a good deal before, but once we got this retrade, the returns went through the roof, and it's a management play. It's not deep value add. We're not spending a lot of CapEx, limited CapEx budgeted. So that's that deal. And just kind of looking at it now, we bought it in September. The market has moved so much, and it's not just Waco. We bought at like 62 a door, and there's stuff selling at 100 a door right now. So we've already, if we tried to sell, and it's a little complicated because there's a deal maintenance penalty. But if we sold now, let's say, in theory, we'd already hit our exit price that we projected out 5 years from now. That's how much the market has moved. And we're seeing that on most of our investments in the past year or two. The market has moved a ton because rents have been, double-digit rent growth.
Wow, interesting. So that was done as a syndication, is that correct?
That was a syndication, yes. Yeah. So that was friends and family. And the deal was so good. Our our general partnership put in about 1/3 of the equity into the deal because we love the deal so much.
Wow. Okay. So how much was that capital raise approximately?
It was about a $3 million capital raise.
Currently, are you mainly, are you collecting investors mainly from friends and family? Or are you going outside of that now too?
Yeah, it's mostly friends and family. Like I said, I have the Dallas multifamily and more virtual meetup and in-person meetup. So I've gotten some, investors that way as well. And the idea is, and this is what's interesting about kind of generally the syndication world and the people that do syndications, generally always, and it's really kind of related to go to abundance. Everyone is really just out there to try to help each other. So, these meetups that I do, it's educational. People can sign up, people maybe that have been doing it for a long time or have very little experience. We have these meetups to teach people about syndication, underwriting deals, maybe real estate taxes, insurance, just giving to people, not expecting anything in return. And then maybe they invest in our deals, maybe they don't, or maybe they become a partner in something. You just never know kind of what it is. It's kind of the go-giver mentality, that book by Bob Berg. You give without expecting anything in return, and the universe just gives back to you.
Yeah, I get it. Are you raising money for anything even right now? Any other projects and stuff like that you're working on?
So we're still looking at deals in multifamily space. We feel like the market might be a little bit overheated. So we're not as aggressively pursuing things as we were kind of last year. We are looking at, so my partner's brother has been in the crypto space for about 6-7 years, created a good amount of his net worth through that space. It's a math PhD candidate, super smart guy, really deep in the space. So we're exploring doing something in the crypto space. What we're probably going to do, we're going to probably have some virtual meetups about, cryptocurrency to kind of get people on board, people that, still kind of want to get, understand it better. You get to meet our team. We'll just kind of, talk crypto. So we're looking at that now, kind of in exploratory mode. We're excited about it. Lots of opportunity. Obviously very volatile, very risky, but, with that deep knowledge, we have another partner that's been doing it for a while too. With that deep knowledge, we feel like we can, it's just offering another alternative to our investors that are invested with us on these real estate deals, another investment opportunity.
Okay, no, that makes sense. Regarding just your existing deals in multifamily, how are you finding I know deals are getting harder. The good deals are getting harder and harder to find. Is it mainly just through broker relationships, or you have your own systems to find stuff off market and go direct to seller, or a combination of both?
Yeah, I have a technology background. So one of the first things I did, I listened to I think it was a Bigger Pockets podcast where these single family home guys were sourcing deals through texting campaigns. So I was like, well, why don't we try that with multifamily? So we've done a bunch of different texting campaigns across the country with different syndicators, a broker in San Francisco, actually. And we've done it in DFW. I think we might get our first deal in San Francisco with this broker through these campaigns. It's a direct to seller method. We've had a few deals, one deal in Waco that got pretty close, another one in Virginia, my partners in Virginia, that I acted as an advisor and raised capital in their deals. We got pretty close. So that's another kind of secret weapon that we have in our pocket, but most deals are through the brokers. The brokers are the gatekeepers. You have to build those relationships with those guys. And if you build a good enough relationship and you have a track record for closing deals, they'll actually give you deals that are truly off market and not overpriced. Because generally right now, if things are going fully marketed, they're just going to be bid up like crazy. And we feel like people are overpaying. So it's got to be kind of an off market broker relationship sort of deal.
Okay, that makes sense. I have a question as it relates to you being a limited partner investor. It's like, I know you are in, multiple syndications as a LP investor. Like, do you have any, like, how do you keep track of everything? Is it simple? You keep it on a spreadsheet, or do you have any other, special software systems to manage everything and keep track of the returns, or how do you do it?
Yeah, I mean, right now it's a simple spreadsheet. I have all my passive investments put in there, kind of what the projected cash on cash is. I have the ones that, highlighted in green that are actually cash flowing right now. Some of them, a lot of them are pretty new. We just kind of started this LP investing over the past year generally. So, some of them don't pay out for the first 6 months because they're deep value add. That's basically, it's a very simple tracker. And it's supporting our family. So it's important that we track it, make sure that the income is coming in.
Yep, makes sense. And as a general partner, now that you have your own syndications, I mean, what do you like? What do you consider the hardest parts in running these syndications now that you're on that side too?
Yeah, so I would say it's, I've always been kind of a gritty person, kind of roll my sleeves up and get into the details. So I do enjoy doing that. Coming from my IT background, I like tinkering things and fixing things and optimizing things. So I think the toughest part is value add is hard. Our property in Waco is a C-class property. So some of the tenants can be challenging, but I think that's the hardest part. It's the asset manager part. And that's my background. Most people are like focused on getting deals and kind of move on to the next deal, The asset management piece is one of the most critical pieces, because you can just turn a really good property into a poorly performing property if you're not focused on it. So we have weekly calls with our property management team. Our property management team is really on it. And we have our on-site property manager on the call reporting out to us, the partners, how the property is performing. So it kind of puts them on the spot. They don't want to say, hey, look, our occupancy dropped to 80%, because we're going to be like, well, what's your plan to fix that, right? And it happens weekly. So it builds in the accountability. But I would say that's the biggest challenge, is staying in the details, managing your property manager, and the asset management piece.
Okay. Regarding, your investors, can I ask you, like, how do you structure deals with your investors? Is it kind of different from, syndication to syndication, or is it kind of, is it you're using the same structure on all of your syndications?
Yeah, I mean, generally we use similar structures, like 80-20 split. Sometimes if it's a smaller deal, it might be a 70-20, 70-30 split. And the fees are pretty similar. Sometimes the fees are a little bit higher for smaller deals. But yeah, I mean, it's usually, pretty similar. And it's really, like I said, returns have come down. Like I've seen deals now that are, we asked to participate on in Houston to raise capital for 6% cash on cash, which a few years ago, you were kind of at 8% cash on cash. So return expectations have come down. I just think because multifamily is such an asset class that isn't going anywhere, and especially in like a DFW market, it's starting to turn into kind of an Austin-like market where people just like, I just want to buy no matter what the price. But generally we have similar structures. It's just return expectations have come down for investors.
Okay, got it. Regarding, multifamily, what's your opinion? What's your outlook on the multifamily real estate space? I mean, down the line, over the next 5-10 years, for example, how do you feel about it?
Yeah, I think if some of these people we think that are overpaying and they're holding for 10 years are going to be okay. If there's like a dip in the market, you're going to kind of outlast that dip. And then, when I worked at Nuveen, we all had kind of like 10-year holds, right? So we were super aggressive on pricing. We had to put money out, and we chased deals and we had to buy deals. So I think that's going to be fine. I do think that, and I'm starting to see some, indications that the market is cooling down a little bit. And this is why, my partner and I were on the sidelines multifamily, but we're just not pushing as aggressively. We do think with rising interest rates, a lot of people buying deals with floating rate bridge debt, that there might be some issues with some of these newer, inexperienced syndicators. where the prices might come down and they might have to be forced to sell or sell at a discount. Another reason why we're kind of looking at the crypto, it allows us to kind of stay liquid and wait for those opportunities. So in the immediate term or the past next year, we think there might be a little bit of pain in the market. That's kind of how we're looking at it. But I think overall, multifamily, if you're buying for 10 years, like I just talked to a partner today, we're looking at deals like partners that just want to hold for 10 years, maybe forever, and just refi and roll, which is, you refinance the property and, you kind of roll the profit. So, that sort of strategy, I think overall with multifamily, especially in DFW, just, you can't go wrong.
Yeah. Okay. How big is your, who's on your team? How big is it? And like, what kind of roles does everybody play?
Yeah. So, with Leone Real Estate Partners, it's just really me and my partner in Waco. I have a kind of an asset management operations background. I also do fundraising. And my partner in Waco, he was a lender. He was a lender at a big bank for multifamily properties. So he has a very conservative hat. I'm a little bit more aggressive with my, investment approach. So we have like a good counterbalance, a good yin yang.
Yeah.
And he does most of the underwriting, right? So I'll underwrite the deal lightly. And if it looks like a good deal, he'll dig into the details and like really kick the tires. So it's really just the two of us kind of playing all roles: asset management, investor relations, underwriting. I have broker relationships here in DFW. He has broker relationships, everything Waco South on I-35 down to San Antonio. On some of the other markets, like I have partners in Charlotte, I'll act as an advisor and I'll help raise capital. And then we have 2 deals in Virginia. I have partners in Virginia. And again, I act as an advisor and raise capital for those deals.
Okay, I got it. Remind me again, how did you find your business partner?
So my partner, I found through the guys that host the Houston multifamily more, connected me with him. He was looking for partners. He quit his W-2 as well, kind of was listening to podcasts, like I can do the syndication thing. And so, yeah, we just got introduced that way. So, now we have the firm together. We own this Waco deal together, and we're looking at this, this crypto space with his brother.
Oh, it's cool. It's like, do you think that you could have done it just by yourself, like out of curiosity, or you think that just, it was all, is it, through the synergy of all these partnerships that you're able to do all this stuff so rapidly? You know what I mean?
Yeah. I mean, I had this kind of struggle right out of the gate, like coming out of the W-2. I'm like, oh, I got all this real estate background. I could just do it myself. And my wife, she's very blunt. She's a very blunt New Yorker. She's like, just get your ego out of the way. You can't do this yourself. You join this community, like start opening up to like see where your weaknesses are and start partnering with people. And once I kind of opened my mind to that concept, the businesses really took off. But like at the beginning, I was struggling and my ego was in the way. Like I could do this myself. I don't need anybody else. And, you see like real estate, they say real estate is a team sport. Building a business is a team sport. And you got to be honest with yourself and figure out what your weaknesses are and backfill that with someone that has your strength, backfill your strengths.
No.
So
absolutely. I think even for myself, it's just my own business and my investing and all that stuff. Just partnering, like I learned a lot last year. I was able to, I read the book, Who Not How, and it really just opened my mind. I was like, I'm doing everything wrong. Why am I doing everything myself? I'm setting my own ceiling because I'll go even farther if I just leverage other people's talents, because I'm good at a lot of things, but I'm not but I can only go so far. But leveraging on other people's strengths where I'm weaker at, I just I can very relate to you. So, no, it's been amazing. So like, what do you love, just about, doing what you do now compared to, what you were doing before? I mean, you're still on the fairly newer side to doing all of this stuff, but like, what's it done for your life? What do you like about it?
It's really, it comes down to time freedom. It gives you time freedom to make your own schedule. I pick up the boys, a few days a week early. I'm taking them to Lego class today. I get to pick them up and just make my own schedule. And, if I have a meeting and, without having a boss, like I can cancel that meeting unless it's, some super important thing. So, it would be difficult for me to ever go back, knock on wood, to kind of the W-2 and kind of seeing what running your own business is like. Obviously, it's very scary. There's a lot of risk. And you're constantly kind of stressing about that. Mm-hmm. But the time freedom that you get from running your own business is just, you can't put a price on it, right? It's invaluable.
Yep. What's your, let's talk about diversification. I mean, you're doing, mainly multifamily right now. Do you do anything, do you have any strategies in place just for diversification? I know that you even mentioned crypto or whatever. Is that your way of diversifying, or do you already diversify within multifamily?
Yeah. I mean, just looking at, my family's portfolio, because I worked at that W-2 for a while. I have a retirement account, right? Stocks and bonds. I have, investment advisor that kind of manages that piece. So there's that diversification. When I lived in San Francisco, my buddy started up some startups, invested in his companies. So that's more, it's more private equity investment, and it's very risky because it just can go to zero. That's also part of the diversification. But to me, like the real estate stuff, that's the stuff I know. So I know it really well. I've been doing it for a while. I'd rather put a lot of bets in that space, the stuff that I know and stuff that I can control. Even the stocks and bonds, I kind of let my investment advisor kind of handle that. Honestly, I'd rather just have it all invest in, maybe other asset classes, because I have industrial background, a little bit of retail and some office. You can kind of diversify that way. But yeah, a lot of it is in private equity, either kind of private companies or real estate. And again, on the real estate side, the fact that we can control it and we can push and make decisions kind of gives me comfort, even though it's on a riskier side, when you're on the GP side.
Makes sense. Is there anything else I should be asking you that I haven't asked yet?
I don't think so. I mean, I think, if we're kind of ready to wrap up, I can give out my, contact information and talk about the meetup.
Yeah, actually, let's talk about the meetup. I'll get your contact information later on. I have some questions that I like to ask, my guests. But let's talk. Actually, your meetup is actually in person, or is it on Zoom?
So we do both. So we launched it through COVID, and we had a virtual meetup once a month.
Okay.
Right? We had and a lot of them have been recorded and they're on our website. So one was with a well-known syndicator, how to underwrite expenses for a property. Another one was how to underwrite revenue. Another one was what IRR means and how to kind of dig into the details as a passive investor. And if you put if most of your value is kind of on the back end, that's a riskier deal, then it's more embedded in the cash flow. So James Kandaswamy talked about that. So those are kind of our virtual meetups. Yeah. Then we started transitioning to virtual and in person. We have one in the Dallas Star, Frisco once a month. We have one this Tuesday, and it's super casual. It's just about talking about real estate and having drinks. And there's a lot of newer people that attend and people that are super experienced that attend. Mm-hmm. And it comes under the Dallas Multifamily and More brand. Kind of stopped the virtual for a while, but now that we're doing this crypto thing, we're going to start and kind of piggyback off the and more piece of multifamily and more, and start having these crypto virtual meetups just to kind of educate people and get to know people in the crypto space.
Oh, awesome. I do have some final questions for you. So first one is, what are you excited about in your business right now?
I would say these crypto investments and kind of potentially launching that business, love learning new things, kind of been doing it for, a few months, and just giving our investors, another investment opportunity potentially in crypto.
Yeah, that's awesome. Any big goals that you're working on, this coming year? either personal or business?
I would say, the big thing is, because we're, slowing down multifamily a little bit, launching this fund, super excited about that. Focus on the family, part of the GoBundance pillars, right?
Absolutely.
A lot of GoBundance people talk about Acton Academy, so we're looking at that right now. We have a call with someone in the Frisco, Acton, just launched to see how that's going to go, and hopefully, my wife and I are super excited about it. Mm-hmm. Hopefully, it's a good fit for our sons. Mm-hmm. But that's kind of the big focus this year is just, focus on the family. And again, you being an entrepreneur, getting that time freedom allows you to do that. Yeah. So yeah.
That's awesome. What does success mean to you?
I would say, we're getting there, allowing time freedom that I can create my own schedule, meet with the boys, pick them up early. I live with my mother-in-law, which is great. She's great for the kids. So spending time with her, she's really into golf, spending some time doing golf with her. Mm-hmm. It's really just about time freeing and just being more well-balanced. Because as an entrepreneur, you're always going 100 miles a minute. I'm a New Yorker. I'm an A-type. My wife is an A-type. So just taking the your foot off the gas a little bit, mm-hmm. to kind of notice life and smell the roses. I think that's success. That's
awesome. What's your superpower, by the way? What's your superpower that's contributed to your success so far?
So Angela Duckworth, right? Her book about grit, to me, success is all about being gritty. I'm just a super gritty person. Like I said, I love rolling my sleeves up and getting into the details and kind of solving problems. So I think my superpower is I'm super gritty. I just don't let up. Sometimes I need a person on my team that will say look, this opportunity might have died. Let's give it up. And I would just want to see it through to 100% and complete it. But that's definitely my superpower. The grit is just super important to success, I think. And I think if anyone puts their mind to it, works hard enough and is gritty enough, they can be successful and achieve their goals.
Okay. Awesome. Lastly, how can someone get a hold of you?
So you could go to our website. So that's www.leonerepartners.com, or you can email me at Nick, same domain, at leonerepartners.com. It's right there. That's how you spell it.
No, perfect. And I'll have that also in the show notes, guys. Great. Nick,
and just one thing I just want to say, the other thing that I'm really passionate about is helping people and teaching people. So if you want to learn about crypto, you want to learn about real estate, feel free to reach out to me. I love jumping on a Zoom call. Our website has a Calendly link. You could set up a Zoom call with me and we can talk real estate or crypto or anything else. I love helping people out. If I can help you in any way, just reach out.
Yeah. It's very valuable, guys. Well, thank you very much. That concludes this episode, guys. That's all the time we have for today. Thanks, Nick, for joining me. I love the fact that, you got in this space and you just dove right in full time. It's very inspirational and inspiring. To my listeners, feel free to reach out to Nick directly if you have any questions, etc. Also, thanks for checking out this episode of the School of Cash Flow. Remember to leave me a podcast review on iTunes, as it helps me attract even more great guests just like Nick. So until next time, live life abundantly.
Thanks for listening to another episode of the School of Cash Flow. We hope you enjoyed our deep dive into all the tips and tricks you can use to help you on your passive investing journey. In the meantime, you may visit www.cashflowschoolpodcast.com for more great episodes. Don't forget to subscribe, rate, review, and share. That's all for this episode, folks. See you next time.